There we go. We are good to go. Thank you everyone for joining our Payroll Solutions Community live Q&A. Today we are going to be discussing the updated 941, and we might even touch a little bit on the difficulties that desktop users are having with the forms. We are joined with special guest Matthew Fulton, who is going to help me demonstrate and explain all of the new pieces of the 941, along with dissecting a little bit of the things that haven't changed, because I didn't realize that people weren't familiar with the 941 in general, let alone all the new changes. So, and Matthew brought that to my attention last week when we were on QB Community Live doing this on his channel.
Well, you think about it, like with the automation stuff that's available nowadays with the different payroll platforms, there hasn't been much of a need for us to actually question or dive in deeper. And I'm the first person to admit that's not a good answer. We should be doing that, trying to protect ourselves. But now I know, knowing is half the battle, as they would say. So,
right.
All right. So shall I jump in and get started here?
Yeah. I
Cool.
think I allowed you to share your screen.
Yep, good to go. So to everybody who may or may not be familiar, my name is Matthew Fulton. I'm with Parkway Business Solutions here in beautiful Ventura, California. I am the co-creator of the Facebook group QB Community Live with my cohort, Linda Artisani, good friend. And we, it's a Facebook group that's it's based on the concept of together we all succeed. So we are doing something a little bit cool and testing something at the same time. Shannon made you my guinea pig, which is always trying to find ways to do live transcription for people through Facebook. So I'm hoping this kind of will work at the same time. Guess we'll find out though. So the goal today is to kind of go through some of the variations or differences of the new 941 document itself. And then I've actually taken the 941 document and basically tried to turn it into a calculator so we can kind of play through that as we go through the slides pretty quickly here. What's causing this change, of course, is, surprise, surprise, COVID-19. We needed the ability to be able to go through these different documents and look at exactly what has, what different programs are requiring us to track different aspects of pay that will then basically be used to calculate and validate the wages per quarter. This primarily comes around with the FFCRA, which is the Family First Coronavirus Response Act that came out at the very, very beginning. And it basically offered employers the ability to, if you had somebody who was directly impacted by COVID, being that they either were told they had to self-isolate or quarantine, which is different than shelter at home. But if they had to do one of the other two, they would still be able to be paid for up to 2 weeks or 80 hours worth of work at the regular pay, and employers would get a dollar for dollar tax credit for any dollars they paid that way. And thus, this comes into the 941. Now, the same thing comes true as for the Family Leave Act aspect of it, which is if a family member was impacted and you needed to care for them, or even if you had childcare, where if your childcare was closed, like school was closed, so forth, there are ways that you could also have compensation during that time for missing work, but it was at 2/3 the pay rate. Through that process, there's going to be portions of all of this stuff that, of course, is going to be refundable, or I should say you get the credit back, and other parts that are non-refundable. And the first things we start to see, we'll go into a slide here where it gets a little bit bigger, but it's that 5A columns here where you're listing out the qualified sick and family leave. Now on the next page, because while the document's much larger, there's basically 3 pages where you're putting information into it, okay? The second portion of it, page 2, starts to go into where you can be doing deferrals of your Social Security, as well as the employee retention credit if you're keeping employees on. And if you did not take a PPP loan, you can actually take up to 50% off of the wages for a person as an employee retention credit. I believe the maximum is $5,000 per employee during this period of time. So it's 10,000, you get to 50% is how you get to 5,000. And this comes into play on your line 13, B and C. I'm going through some of this a little bit quicker because I want to be able to pull up the actual document itself, and then we can kind of go line by line through some of that stuff as well. So on page 3 itself, now we start to get into like your qualified health plans, any of the expenses you're paying towards that, a little bit more about the employee retention credit. When you look at the form itself, it's bottom line, it's confusing. A lot of the information is derived via like literally it's referred from this back to this, here to there, so forth, and it can just get a little bit confusing on the language they used on it. They didn't just put like subtract this from this to make it simple and use that consistency. It's like somebody wrote half of it one way and the other person wrote the other half a different way. So as we look at the beginning numbers of all of these details here, right? Obviously, Shannon, you pointed this out very nicely the last time that one of the best parts of the form is the top. Well, it hasn't changed much. So it's nice and easy to fill out. You still got that one pretty rock and rolling. But you will notice that the box 1 has been grayed out because this is specifically used for Q2 and forward. Q1, you need to still use the old 941 form, which Shannon, you know a little bit about that, right?
Yeah, and it depends on what payroll software you use. But if you are in QuickBooks Desktop, which I still have a fair amount of my clients in, you are no longer have access to the Q1 2020 941. So if I have a client and I need to prepare a 941 for Q1, I will have to go out, find the Q1 941 for 2020 and manually fill that out. I am not sure what other payroll software companies do,
Yeah.
but because QuickBooks Desktop can only keep one form on file at a time. So when this one came up, it kicked out the Q1.
Yeah, so it's a good point. Obviously, and I think part of the thought process there is hopefully you've already done the Q1s. You kind of had 3 months of time to get to that point. So if you're doing it in arrears, you're probably going to be using some kind of other service to get that handled also. But just be aware of that it's going to be different. Additionally, so keep in mind that the stuff we're going to be talking about, how this has to go through here, this is literally requires everything to be recoded on the backside software development wise. So I know we're 7 days into this new quarter and many of us are rushing and wanting to get this done as quick as possible. Please, a little bit of patience. They've literally got to go through, recode the way this stuff is formulated, pull information from payroll. I mean, this has all never been done before. So fortunately, we do have extra time. We've got to the end of the month for it to still be on time. And I'm sure there will still be extra leniency past that if it should be necessary, but we'll see.
Well, and also if you've made all your deposits on time,
yeah, you're fine.
It's the same. You still have until August 10th for the form to be filed on time, because you have 10 days into the next month, just like always. Okay. And I don't know when they made that change, but I just discovered it a couple months ago, and I thought that was great. If your deposits are made on time, you have until the 10th of the following month for them to be due.
I think that is actually, I never knew that. So thank you for that information. I always thought it was by the end of the following month.
It used to be. I just saw a message in here that our audio dropped out for Lauren. Can everybody else still hear us? If you can just type in the chat, if you can hear us, I would appreciate it.
Perfect. So as we're waiting for that response, some of the other stuff, of course, I mean, your top ones, the number of employees who received your wages, your total wages, tips, and compensation that are included inside here, federal income taxes. I mean, these are all aspects of the 941 that were already in existence itself. But as we dive a little bit deeper, this again, that 5A area is where some of these differences come into play. So we're talking about right within, 5A 1 and 2, your qualified sick leave, again, that's going to be, it's not subject to employer share of Social Security tax. So you'll notice at the top here on 5A, it's usually times 0.124. So you would take the total wages, times it by that is the amount of tax that you were supposed to have collected and basically submitted. On these specific ones, the employer portion is not required, so it's in half. It's 0.062. So that becomes a big difference. And then these numbers will be go forward through quite a bit of this new 941 on a worksheet. Same things we were just talking about on the qualified family leave, because again, the employer aspect of it is removed. Now, something I was not familiar with until really going through this whole thing is on the Social Security side of it, your wages are taxable up to $137,700 per year. And then there's no more taxes until you reach $200,000. So there's
That's actually not correct.
That's not correct? Thank you.
So Social Security caps at 137.7.
Okay.
And Medicare has an additional Medicare tax of 0.9%, but that is only for the employees, not the employers. That's why there's 5D, or no, where is it? 5D,
yes.
Additional Medicare tax withholding.
So it's a Medicare donut hole, not Social Security donut.
There's Medicare wages are taxed always. There's no cap on those. It's just there's an additional tax when the employee makes more than $200,000.
Got it.
There's no donut hole. Sorry, Matthew. There is bacon, but not here.
I was going to say I was hungry. Okay, so the next part of this for the tax credits, if we go on to the next area, is your 11A, so qualified. So your R&D credits basically is what we're talking about here for 11A. There are benefits to where if you're creating something new, bringing something new to market, you should be talking to your tax professional because you may be eligible for R&D tax credits. And they can actually go back in arrears as well, to where you can basically apply up to $250,000 research credit against your payroll tax liability. It's not an area that we're specialized in, but hopefully we're turning on a light bulb for you if it's something that you might be able to benefit from. And of course, that gets tracked onto this form as well. And then you've got your non-refundable portion of the credit for qualified sick and family leave. Again, the FFCRA is what's happening here on 11B. And then the final last one is the non-refundable portion of your employee retention credits from the worksheet that we'll go to in just a moment here. Now, one of the things that I was not familiar with until doing some of this research, a big part of this has to do with tips. So understanding the difference between what a tip is and a service fee. I don't know how many people are familiar with that, but a service fee is handled differently. And that's where if you've got, anytime they're putting an automatic tip on there, it's actually a service fee and it's handled completely differently. So banquet events, if you've got a large table, hotels, so forth, where a tip has certain requirements, such as it must be made free from compulsion. Customer must have the unrestricted right to determine the amount. The payment should not be subject to any negotiation or dictated by the employer. And the customer should generally have the right to determine who receives the payment. I brought this up because it actually plays pretty heavily into the PPP and of course into these forms as well. So I found that pretty interesting.
I find it interesting too. I don't really do restaurant payroll, so I really did not understand the difference because I never had to research that before. So I'm really glad that you found that and brought that up.
So in the last page of this is the deferred amount of the employer share of Social Security taxes. So this is going to be on our 13B line. Again, so this is the deferral that's coming up because of COVID. You're able to push this stuff out to keep the money in the company itself. But you can defer the deposit and payment of the employer share of the Social Security tax deposit due on or after March 27th and before July 1st of 2021, as well as the deposits and payments due after January 1st, 2021. That's a mouthful of stuff. So it's you go through the instructions to tell you a little bit more about that, but again, deferring that information. Then the last part, so as you've probably noticed, each one of these sections we've talked about, it keeps touching base back onto this FFCRA, the employee retention credits, all these things. You've got the refundable portion, the non-refundable portion, so forth. So it's kind of working you through all of this as to where these details are going to go into.
So I think a key thing here to know and remember is that if you got PPP, you are not eligible to defer Social Security or Medicare. And we had a question earlier, Matthew, and I really don't know the answer to this question. But Mira asked, if the company had staff on COVID qualified leave, but the company also received PPP, can they get the tax credit? And I believe she's talking about the tax credits in section
FFCRA.
5.
So the tax credit under the FFCRA, yes, because you cannot use the wages anything that you had for wages paid through the Family First Coronavirus Response Act, those wages are not eligible to be considered part of the cost of the PPP. So you're eliminating that double, the overlapping aspect of it. Now, as we talked previously about the employee retention credit, the answer to that would be no. You can't do anything with the employee retention credit if you've taken a PPP, even if it's a situation where you had like half the employees you were paying one way, you can't split it. It's like all or none, basically.
And let's back up to this previous screen. It's not showing up on there, but I think it's a really key thing to mention is line 13F requires the form 7200 to be filled out if they are taking that. And that talks about total advances received from filing form 7200. And form 7200 is the form you need to fill out for the employee retention credit. And qualified sick leave, qualified family leave. I think there was another form, a new form.
I actually have it in the packet that I forgot to get the 7200, but the other one was the 88 something or other.
I'm just looking for it here on the sheet.
We'll pull it up here in a short bit.
But the worksheets that go along with this 941 are just amazing and not in a good way.
5884 is the other one I think you were thinking of. So the last portion of this 19, 20, 21, 22 is, again, qualified health plan expenses. You're going to have your qualified wages for the employee retention credit, as well as the health plan expense allocate, for the wages reported on line 21. Each of these are going to be filled into these different fields. What I'm going to do is I'm going to switch over real quick here to my worksheet, because I think this will help kind of show more of the details of it. So we're going to go through and fake a whole bunch of different numbers on here. So if the numbers don't tie out, it's because we're faking a whole bunch of numbers on it, okay? What I've done is I basically, for this example, went through and tried to turn this whole thing into like a big calculator, with the biggest part of it being the worksheet itself. So as we go through, it will automatically start to populate in all these values, and then we'll come back and kind of look at them, because this really is super, super important. It's the real like fundamental core of everything we're doing. So let's, Shannon, why don't you shout out some information on all of this for me? Since you played with these 941s, you can make up our...
Well, how about I get you some off of transcripts that I got today.
Perfect.
4 employees.
Okay.
$12,729.36. $1,223.41.
Taxable Social Security wages.
8566.25.
Qualified sick leave wages.
Oh, let's just do 1, 2, 2, 3, 41.
Works. And family leave wages, usually it's probably one or the other. So let's put 1,000 for this,
Okay.
for the heck of it. Taxable Social Security tips.
4, 1, 6, 3, 11.
Okay. And taxable Medicare wages and tips.
1, 2, 7, 2, 9, 3, 6.
And taxable wages and tips subject to additional Medicare, it's probably 0, right?
Nothing.
Nobody made enough money. So as we can see with these numbers, so 8, we're obviously over our amount here, but that's okay. That one's good. So what we've got is it's basically automatically going through calculating the percentages for us. Now the nice thing is going to be, we'll go over to that worksheet in just a moment here. Fills in as Social Security, Medicare taxes. It's basically telling us we need to add the specific different columns. So it adds it in for us. If we had a section 3121Q, and I believe I put that on the end. 3121Q is going through and talking about tips included for both employee and employer taxes. It's basically all about tips, the different tips and the FICA contributions. It's about a 7-page document, all words that kind of go through the details of it, that you can look up and dive in deeper if you wanted to, of course. So get back here. All right, so we're back to our form here. Now we would look at our current quarterly adjustment or for fractions and cents. If we had anything for that,
That would be
0.
-1.
Minus 0.01?
Yep, -1 cent.
Okay. What about current quarter adjustment for sick pay?
Nothing.
Okay. And current quarter adjustment for tips and group life insurance, lifetime insurance?
Nothing.
So I'm going to skip forward now and let's go look at that worksheet because this should be updating for us at this point. As we're going through, this is populating in, I could have a formula error on the back of this PDF, which is why we're not sharing it quite yet. But basically, the way this works is you're going to end up coming in and it's telling us we need to enter the amount from Form 941 5A, right? So if I was to come in back to here, it's going to get right here, back to 5A, we should actually have this total amount right here, 1,062, would then populate over to this spreadsheet. As we go through, we add all these on. It then adds in this extra amount at the bottom. Why is it not changing? The amount would then add on to basically 1C. This would give you the total amount from those the two fields, and then you multiply that by 0.5. So this is going to give us determine the amount of credit that we could actually get from our different forms like 5884. So this whole thing, it just keeps compounding on each other all the way through. The only fields that you actually end up kind of adding additional details on are the ones you're still seeing that are not populated at the moment. The rest start to build off of each other to keep growing larger and larger and larger. So you'd have your, from this point, I'm sorry, we've got our 50% basically, third-party sick payer, if you had details there. What I found interesting is, I mean, you're going, each section's a different aspect of this. So the sick and family leave credit, right? That's one of the ones we did fill in here. You'd have your qualified sick leave report, again, from 5A. This one we actually have showing up correctly. That's the 5A here. Populates in. Then if you had additional, this one I didn't have calculated automatically because it's basically saying qualified sick leave wages included in the 941 Part 1, line C, but not included on Form 1 5A, the Part 1 5A, because the wages reported on that line were limited by the Social Security wage base. So we're looking at 5C in comparison to 5A. So in that scenario, it would be this minus this is what I would read that to be. Would you agree with that?
Yeah.
Okay. So we would, that's what I mean, like, I can't imagine doing this without this, like having some form of a calculator that you'd be putting this in. Do you have that number?
Which number?
I thought you were getting a calculator. So,
Oh, no,
I
I
mean,
was just looking, I was just grabbing my
yeah.
paper form.
So I just guessed a quick number, put it in. This gives us our total qualified amount by adding these two together, right? So there we had our 11,000. This actually should be, so if I had the difference between the two, would equal out to the exact amount that we had once before. So let me get a calculator real quick here, and we'll do it correctly. Sorry, I just made this. I started making this calculator last night, trying to have it ready for us. So we had our 12729.36 minus 1223.41 equals, this is 11,505.05. So now this, of course, matches the full amount as what we were looking at. With that in mind, qualified health plan expenses applicable to the qualified sick leave. So Form 941, Part 3, line 19. So now we're looking back here, would be line 19. If we had any exact expenses that were, so if you're paying for the health plans for employees, everything else, that would be what would be added into this portion here. That's correct, right, Shannon?
Well, my question on that, because it can be interpreted a couple of different ways, would this be the amount of the employee's monthly health insurance that they would have had withheld from their check if they were working, but the employer paid it on their behalf even though they're not working? I got super lucky where all of my payroll clients didn't have to lay off their workers.
Okay.
So I haven't really had to dig in and figure out these things because they haven't affected my clients, and it's been crazy busy here at Payroll Solutions Plus because everybody wants to become compliant with payroll all of a sudden.
Well, it makes sense because everything ties back to payroll, all these different discounts, everything else. So, so for all intents and purposes, at the moment we put a 0 in, so it populates in. There are more instructions, like if you literally go through all of this and you read it line by line by line, of course, right? You can get more detail from it all, but it's some hefty reading to go through the instructions. So definitely, take a look at that, play, do your due diligence on that side. This is where we really take for granted the fact that this stuff gets filled in for us, right? Like really being able to truly understand where each part of these things come from. So next part of it down, employer share of the Medicare taxes on the qualified sick leave wages. You get that by multiplying your line 2A1. So that's coming back here. I'm sorry, I just said that wrong. It was 2AII by 1.45. So I'm sorry, it's going to be taking this primary number. So that's your total taxable wages again, right? Because you added those two together. Multiply that by the 1.45% gives you this total amount. Credit for qualified sick leave wages. Now you're adding together your 2A, II, B, and C gives you this total. So again, this whole compounding over and over again throughout all this. Now you're taking from 5A back on this last one. 5A, II is this one here. taking this information from column 2, populates in, add the two together, two pieces. So the A1, A2, boom. Next part down for 2F is your health plan expense, again, for, as we were just talking about. So this would be your line 20, which is back here, would come off of this one here. Same idea as you were just talking about if you had expenses for that. Populates in. Employer share, medical taxes and qualified family leave. So it's same, like literally same questions, but now you're doing it for the other portion of it. Goes, populates into the total amount. So then now as you start to get into all this, the whole point is this is going to give you the refundable portion of the credit for qualified sick and family leave wages. Once you've got this information, this whole thing we just did is going to go back to your 13C and will populate right into here. So if we had, I'm going to assume that we've got the right number here. Would go here. Dang it. It would go into the field where the formula is supposed to work and automatically populate it, but it's not doing that. I'll just change this real quick. This is how you do the formulas, by the way, everybody. If you come in, you can actually go to the backside, grab something, properties, calculate. It's not calculated. I'll go boom. I didn't pray to my demo gods today, apparently.
I love it when it all works.
I know. I love when the plan comes together. So that would basically, that number would transfer, go up into that appropriate field, as you can see. And then your last one, same kind of concept for the employee retention credit. So you go through the qualified wages. Again, you look on here, it's going to be form 941, of course, line 21. So line 21 would be right here. Anything that you had, if there, again, if you're not doing a PPP, the qualified wages would be basically up to $10,000 per employee. So maximum would be $5,000 basically per employee. So we said we had five employees?
Four
employees. So the maximum you would have had, max, if everybody had taken the entire amount, would have been the 20,000 is the max that could have been at that point. But this will work you through each of these different details. So I strongly recommend you want to get this worksheet as well. It's not, for some reason, they don't include it into the 941 that you can download, but it is when you download the instructions, it's in there.
Yeah, definitely download the instructions because there's another small worksheet too that helps with some of the other numbers. And, you know, I can't stress this enough, but you have to make sure that you double check and triple check your numbers, because one small error on here, because everything builds and feeds off of each other, could become a huge error when you're completing the form.
Absolutely. I mean, imagine I missed one of the ones, right? Becomes a whole different picture, right? I mean, as soon as you've got a different number. So it does. And it really is up to us. Even if you have an automated payroll system that's doing this stuff, we still need to know more about these forms. So when we have to go back and to do an audit of this information, this is going to be the only way that we can actually verify for ourselves that everything is exactly correct. So as I'm still diving in deeper, learning more about this myself as it is. Now, this was one of the other documents that are necessary, this 7200. I didn't grab a copy of that. I can try to pull that up online so we can see what that looks like as well. But this is one of the documents you have to go through to figure out just literally one of the line items. And it's not included again in that 941 packet. My goal is to, as I've been trying to put this together, is grab every single document that it's referencing through the 941, have copies of it all together to kind of have it as a worksheet template that you can refer back to in the near future for people.
Yeah, and by the end of the week, I will have something up in the files section of the group.
Oh, perfect. So, I know that it's a lot of information really fast through all of this. Are there any questions that we can dive in deeper specifically to this?
Susan was asking for an explanation of the refundable versus non-refundable portions of the sick leave.
Let's see here. So the refundable versus non-refundable is going through the calculations. To make sure I say this the right way. So I'd have to look up the exact definition between the two. I think what it has to do with is certain aspects, the refundable portion, of course, is going to be under that FFCRA. So if there was additional wages that were paid out that was beyond the 80 hours per, 80 hours that were covered, that would not be considered refundable. Of course, you'd be beyond that, but you still may be tracking those wages a certain way. Or if it was also like, if you have traditional sick leave that was for some reason being pulled out that way, that could possibly be the other part. But I think what I would do is go, I would do a little bit more research onto it to make sure I can get you the best answer for that, of course.
Yeah, because I'm looking at the 941 instructions, and it's just a whole lot of words. But it starts, the non-refundable portion of the credit for qualified sick and family leave wages applies to the employer share of the Social Security tax on wages paid in the quarter that is remaining after it's reduced by a credit.
Say that last part again real quick.
The employer share of Social Security tax on wages paid in the quarter that is remaining after it is reduced by any credit claimed on 941 line 11A.
So basically, I think where that makes sense is, again, the purpose of this form is to actually verify that all types of wages are accounted for, right?
Right, and I think that's what we need the 54.
88?
Yeah, 48 or 88 for.
Which was, so let me share again real quick here.
Yeah, 5884, C line 11.
So this basically goes through, and again, I apologize. I'm by no means an expert on these forms at all yet. We're still learning ourselves on some of this stuff, but hopefully it becomes somewhat of a resource for you. So as you're saying, line 11, credit claim for the employment tax period indicated on line 3. Here you're choosing the period of time. I find it interesting it's so far back. So obviously this is a form that's been around for quite some time. It's not something that's unique to this
Right,
experience.
it's the work opportunity credit. So it goes back to like job zones and different special areas. This is the first time it's widely available for everybody.
Okay. So they're using this old form just for a new purpose. Is that what I'm hearing?
Yeah.
Okay.
Yep.
Interesting. Well, no reason to reinvent the wheel on that side. So, yeah. What else do we have for questions?
I don't see any more, but I had to close out the Facebook one because I couldn't get the audio to stop playing.
So I would love to know from everybody that's in here, how many people are actually manually doing your own 941s in comparison to kind of relying on a payroll platform to help do that for you? I know that we do. Okay. So Susan does manual. Thank you for sharing that. It's got to be a really time-intensive process.
Well, and I don't necessarily do them manually, but I verify all the numbers are correct, which
Okay.
is almost like doing them manually.
Yeah.
because sometimes the software doesn't calculate things correctly. And especially with all of this that's going on, these forms were just approved June 25th.
Oh my goodness.
Think about that for a second. June 25th for a form that's due July 31st, and the software companies all have to code and approve them, and they were making changes right up until they approved the draft.
Yeah, that's pretty much par for the course of this stuff, it seems like, at this point in time. So, very interesting. And I'd also love to know, like, from people in the audience, like, what accounting platforms are you utilizing at this time? Which ones are you finding to be the most useful? For all of our QBO people ourselves, we basically use either QuickBooks Online Payroll, but we usually did not do full service until they started changing like the service offering itself, because we wanted to control when the payroll taxes were done and so forth. And then we additionally would also do, of course, ADP is our next go-to that we always use. Anything that we have more of a complicated payroll or larger company payroll, we would always step up to ADP, which I like. Their Accountant Connect is great. They do a great job. We're getting a lot of QuickBooks Desktop people. That's always been very popular. So Shannon, can you share a little bit more again? What were the challenges that you were running into?
Well, on July 1st and 2nd, I wasn't able to open any payroll form, not just the 941, but it was every time I tried to get into the payroll forms, I couldn't. And for some reason, it looked like the update came in, everything processed and looked like it did, but it didn't. So you had to go and manually pull down the full payroll update. And the one that we just ran into yesterday was filing 0 returns for some of our clients that didn't have, well, it was our colleagues' clients that didn't have wages paid to their employees during Q2 because they were closed. It would not let you file a 0 return. The workaround for that is to create a paycheck and void it, and then run a return that says $0 were paid. That was the only way we could get past that error. A pop-up came up and said no wages were paid, and it wouldn't even open the form.
So you just have to create a paycheck for anybody, void it, and then you're good to go.
Yes.
Interesting.
So those were the big things that I was coming across in desktop, because we also primarily use desktop for our S-Corp owners, and I'm also using Payroll Relief for some of my other clients, but I really like the control because I guarantee that all of the payroll taxes and the forms are going to be done on time. And if I've made a mistake, I cover all the penalties. Yeah. So having that control over knowing that I can verify what the software is doing is a huge deal.
Makes a lot of sense. Yeah, I mean, if you have one minor mistake, right, it can be very costly very, very quickly. So it's going to a professional, having somebody that knows what they're doing with it is definitely worth it. So awesome. Well, great. Thank you for letting me come on and kind of show some of these details. As I try to build up this, as I get the calculator worksheet to work better, I will try to share it to where you can get it into your group or something. So at least people can do some practice runs with it and kind of gain some insights of how the whole thing ties together is the goal.
Yeah, absolutely. And I really appreciate your coming on and sharing your knowledge with us.
Of course. If anybody, if you haven't already, again, we have a Facebook group. It's called QB Community Live. It's with myself and Linda Artisani, where It's made up of small business owners, bookkeepers, accountants, tax professionals, same kind of concept, but it's much broader of questions. We tend to defer, we try to ping in Shannon on any of the payroll questions for sure. But we'd love to have you join that group as well.
All right. Well,
Cool.
thank you everybody for joining us. Really appreciate it.
Have a
Bye.
wonderful day, guys.